Investing, broadly, is putting money to work for a period of time in some sort of project or undertaking in order to generate positive returns, i.e., profits that exceed the amount of the initial investment. It's the act of allocating resources, usually capital, i.e., money, with the expectation of generating an income, profit, or gains. One can engage in a variety of activities, directly or indirectly, such as utilizing capital to launch a business or buying assets like real estate with the intention of renting it out and/or selling it at a profit in the future. In contrast to saving, investing involves putting money to work, which carries an implied risk that the connected project or projects could fail and cause a financial loss. Speculation, on the other hand, differs from investing in that it involves wagering on short-term price swings rather than actually putting money to work. Types of investments. The majority of financial instruments used today to raise and invest funds in enterprises are referred to as investments. These businesses then take that capital and put it to work expanding or making money. Although there are many different sorts of investments, the following are the most typical ones. Stocks and real estate. Should you invest in stocks, real estate, or both? An investor who purchases stock in a corporation gains partial ownership of it. Shareholders are those who own a company's stock and can benefit from the company's expansion and success by increasing the value of their investment and receiving regular dividend payments from the company's earnings. The stock market has long been a popular choice for investors to place their money. While buying stocks is a well-known form of investing, not everyone is aware that doing so also counts as an investment. Real estate has a lower risk, higher returns, and greater diversification than stocks, making it a viable alternative in the right situations. People need an investing strategy that meets their budget and needs, whether they are saving for retirement, paying for college, or generating residual income. A smart place to start is to contrast investing in real estate with purchasing equities. Key points. The option of whether to invest in stocks or real estate is a personal one that is influenced by your financial circumstances, level of risk tolerance, objectives, and investment style. Stocks and real estate both have different opportunities and risks. Compared to equities, real estate is less liquid and typically costs more money and time. However, it does have the potential for significant appreciation as well as a stream of passive income. Although there are dangers associated with the market, the economy, and inflation, buying and selling stocks often doesn't require a large cash infusion. Overview: Stocks versus real estate. The decision to invest in stocks or real estate is a personal one that's influenced by your financial circumstances, risk tolerance, objectives, and investment style. It's plausible to suppose that more people are stock market investors, possibly as a result of the fact that stock purchases don't require as much time or money. You'll need to pay a sizable sum of money down if you plan to purchase real estate. A tiny portion of the corporation is what you purchase when you buy stocks. Generally speaking, there are two ways to profit from stocks: dividends and value growth when the company's stock price rises. Real estate purchases result in the acquisition of actual land or property. Most real estate investors profit from collecting rentals, which can generate a consistent income stream and appreciation when the value of the asset increases. In addition, since real estate may be leveraged, you can increase your holdings even if you're unable to pay cash up front. Returns: Real estate versus stocks. The best time to invest in the stock market is when you have access to advantages that increase your profits. However, you can only take advantage of these benefits to a certain extent, and they are not always available. Independent stock market investing can be unpredictable, and returns on investment, ROI, are frequently less than anticipated. Risks: Real estate versus stocks. Real estate and stock market investors saw their investments lose value as a result of the housing bubble and banking crisis of 2008. The COVID-19 issue is doing the same thing, but for different causes. However, it's crucial to keep in mind that the total risks associated with equities and real estate are considerably different. Real estate. Here are a few things to think about when it comes to real estate and the dangers involved. The fact that real estate takes extensive investigation is the main risk that many overlook. You cannot enter it casually and anticipate quick results or returns. Real estate is a difficult asset to sell and cannot be rapidly cashed in. This implies that you cannot use it as emergency cash. There are hazards involved with managing repairs or renting out houses for home flippers or landlords. Costs, as well as the time and stress involved in dealing with tenants, are some of the main problems you'll encounter. And in the event of an emergency, you might not be able to delay them. As an investor, you might need to think about hiring a contractor to handle the flip's repairs and upgrades, or a property manager to handle the rental's maintenance. Although it can hurt your bottom line, this will take less time to manage your investment. Stocks. The stock market is vulnerable to a variety of hazards, including inflationary, economic, and market concerns. First, because stock prices are influenced by market changes, their values can be very unstable. Geopolitical developments and business-specific issues can both contribute to volatility. If a firm, for example, has a section abroad, it's governed by the laws and regulations of that country. However, if there are any political unrest or economic issues in that nation, that company's stock price could drop. In addition to monetary policy, rules, tax modifications, and even changes in the interest rates established by a nation's central bank, stocks are also impacted by the economic cycle. The investor themselves may be the source of additional hazards. Investors that decide against diversifying their holdings put themselves at greater risk. Who should invest in cryptocurrencies? Without a question, the value of digital currencies has increased significantly. The area of cryptocurrencies has only grown, propelled by the phenomenal rise of Bitcoin, BTC, and Ether, ETH. Initial coin offerings, ICOs, are only one of the many new blockchain investment products that have emerged recently, including non-fungible tokens and decentralized finance. Many proponents of virtual currencies think that these investments could result in the emergence of a new class of millionaires using virtual currencies, or billionaires. But those who haven't made any investments in the world of digital currencies might be asking if there are any good reasons to do so right away. Several justifications for purchasing digital currencies are discussed here, along with some additional factors to take into account before making an investment. Key points. Cryptocurrencies have been called a transformational technology that has the potential to completely alter a variety of sectors. Bitcoin and other cryptocurrencies may also function as a secure store of value because they cannot be printed or seized. Cryptocurrencies are still quite speculative, and there is no assurance that they will ever find widespread use. Before purchasing cryptocurrency, there are various intricate security rules that must be meticulously followed. A transformational technology? Bitcoin and other cryptocurrencies' underlying blockchain technology has been touted as having the potential to revolutionize a wide range of sectors, from banking and healthcare to supply chains and transportation. Distributed ledgers enable new sorts of economic activity that were previously impractical by eliminating trusted players and middlemen from computer networks. For those who think digital currencies will have a bright future, this potential makes for an alluring investment. For those who are convinced of its validity, investment in cryptocurrencies offers a lucrative opportunity to make money while advancing technology. Thefts, scams, and other losses. One of cryptocurrency's most remarkable and distinctive features is also a huge liability. Cryptocurrency users are responsible for securely storing the cryptographic keys that govern their blockchain address because there is no central middleman in the world of cryptocurrencies. Investors who decide to investigate the digital currency market should be aware that certain special security precautions are essential, and that even those precautions might not be enough to protect their holdings from hackers who are continually improving their methods. Investing in real estate and stocks is an ideal way to diversify your investment portfolio, reduce risks, and maximize returns. Diversification is important, especially when saving for the long term. Cryptocurrency supporters should be careful to understand the risks of cryptocurrency before they start investing.